So yes, guys, welcome back. Yes, that was just 15 minutes we have to delay, but I think that's going to be fine. So yes, let's now read the case. For assessment task 2 instruction, let's read the case first. Andrew. So one person named Andrew, the owner of Andrew Slabs. So he has a company, and the company's name is Andrew Slab. He purchased a bench planner. So this is one kind of asset, right? If you purchase a bench planner, because this is not for just for 1 month use or 2 month use. He's going to use this for maybe for next let's say 4 years or 5 years. He's going to use this, right? So that's why this is the asset. The definition of assets is that those stuff that is giving you service or let's say outcomes for more than 1 years. Those are like long-term assets. And some of the assets, even we have current asset like this stuff, this are very small time basis, but still it's going to give you some like outcomes. Okay. And for his company, for like he's maintaining asset number. So for bench planner, the asset number is 346 from Mulu Machinery on 1st July 2014. So Andrew bought a bench planner from Mulu Machinery on 1st July 2014. So just also remember the date because it's going to help you in future. So try to make some notes. Maybe just try to highlight this point, 1st July, then asset number 346. Okay. And remember the cost of the bench planner is $18,000. Okay, so it is expected to produce 5,000 items during its life. So they're expecting that it will give some 5,000 items for his rest of the his lifetime. At the end of its scrap value will be $1,000. So what is the scrap value again? So scrap value means he purchased the asset on $18,000, and after using let's say if we add the depreciation and everything, after some years the value would be only 1,000 after its useful life. He can sell this asset on $1,000. The machine has been operating for 2 years. So it's been operating for last 2 years. Its production in each of those years has been 800 and 1,000 unit respectively. So those years, like first year 800, then 1,000 units respectively, it is being depreciated on the units of the production method. So guys, this is very important because in assessment 1 we discuss about the depreciation. What is the depreciation? But there are some methods to calculate the depreciation. Like we have straight line method and straight line method. A depreciation method is, suppose if we have a asset, let's say $5,000, and if let's say the useful life is 5 years, then we are going to divide the depreciation for each year equally, exactly equally. So $5,000 asset for 5 years. So each year depreciation is $1,000. And units of production method is, this is not the straight line method. This is that depending on the uses, we are going to decide the depreciation. So if first year, if they're using like 800 units, so and second year if the uses is 1,000 units, so that means first year depreciation should be less because it's less amount. Okay. And balance day is 30 June each year. So what is balance day? Balance day means this is the closing, closing time. Okay. So also on 1st July 2014, Andrew purchased a standing drill. So he also bought a standing drill. The asset name is 348 from Danny's Drill. So this is from a different company. It costs $5,000 and will be used daily in the workshop for a variety of purposes. So they're going to use this for a variety of reasons, variety of purpose. And just make sure you understand what is useful life of useful life. Useful life means how many years we can actually use the asset. This is 4 years, and a residual value of 800. So residual value and scrap value, it's almost the same thing. They have a scrap value of this item is 1000, it's 800. And see, I was discussing about straight line method also. So now they're using the straight line depreciation method for this asset. So they both have the depreciation, but both of the assets depreciation methods are different. One is units of production method. So this is going to be, depending on the production rate, and this is going to be just straight away we are going to divide the depreciation for equally each year. Okay. So question number one, in question number one, you have to do some journal entries. So first of all, before starting this, we need to understand what is a journal entries. Why we need journal entries. So for bookkeeping or in accounting, we always, first we need to register those transactions into our book. So there is a different technique, or we can say a unique technique for recording or for registering the transactions. Yes. So see, these are the transactions methods. So I'm giving you the model. I'm not going to give you the money because you need to calculate by yourself. But this model will really help you, because if you're very new to accounting, this is really going to help you about the journals. You need to give the explanation here. And I'm also giving you the journal, which will be debit and credit. Because since this is the first webinar, I'm expecting you might, have some problems or difficulties doing this maths. So hopefully this will help you. But from next time, maybe I'll not discuss exactly about these journals, because I think we can't, learn something. We're here to learn some of the stuff. So it's better if we don't give you the exact, journals. But for first time, it's okay. So let's say Andrew, the owner, Andrew, the owner of Slabs, purchased a bench planner. So see, I was discussing that in accounting, in every transaction, they should have at least 2 sides. So these are the 2 sides. One is plant equipment and the second side is accounts payable. So one should be debit and another should be credit. And even in assessment 1, if you guys remember, I said what is coming to you is going to be debit, and what is going out, it should be credit. So you are getting equipment, so that's why this should be debit, and you have to pay the money to the supplier. The supplier name is Mullen Machinery. So we say in accounting that it's account payable. So that's why it should be credit. So this is transaction for asset number 346. 346 was a bench planner. And again, if we go back, we have different asset. The number was 348. So these have the almost same treatment. Asset is debit, that means plant and equipment is debit, and you have to pay the money. So your money is going out. So that's why accounts payable is credit. For more detail, I understand this. If you are doing journal entries first time, you might be confused, because for journal entry, this is the most important thing about bookkeeping or accounting. you need to know about this. So still, if you guys have question, you can mail me, or maybe I'll try to contact you. I'll try to explain you all the details of journal entries. But for just for now, for webinar, I'm not going to spend much time on this. Just going to discuss about the journal entries. Okay, let's go back again to the case. So in case, I don't know why my mouse, it's not working, but let's say in case the machine has been operating for 2 years, its production in each of those years has been 800, 1000 units respectively. It is being depreciated on the units of production method. So you need to now do depreciation. So again, if we come back here, just always remember, because this is basically an expense, and expense always debit. So depreciation is an expense, so depreciation is debit. And your asset, just try to understand, your asset is, its value is also decreasing. That's a plant and equipment accumulated depreciation. The term accumulated depreciation, it should be credited because your asset's value is decreasing. I know it might be very confusing for you, if I say decreasing asset value, decreasing. So simple, just try to understand, if something is going out, it's credit. So your asset is going, that's why it's credit. So same treatment for both of them, for both of them, depreciation here same. And for again the asset number 348, they have a different journal. It should be a different journal entry, and it should be the same journal, depreciation and plan equipment account depreciation debit. But the amounts, see, the amounts boxes are empty. So you need to, first of all, you need to send me the assessment. And if there is some problem in your calculation, again, I'm going to maybe explain you how to do the calculation. But first, you need to actually try, to find out the calculation. For first one is very easy. It's just the assessed price. That's it. Second one also, just the asset price. So nothing complicated. In depreciation, this is actually tricky. Depreciation is really tricky because we have two different kinds of methods. And first method, this is, let's come back here again. This is units of production method. So depending on the percentage of the units, you need to now find out the methods. And for straight line, let's say if the asset price is $5,000 and useful life is 4 years, so and residual value is 800, that means first of all you need to minus $800 from 5,000. Then you need to divide the total amount with 4. Yes, so you'll get the answer. But I'm not going to actually show you the detail. You need to try it. Thank you for this. So journal entries are done. We just have like 5 normal journal entries that this is done. Then we have the asset registered for 2 items. So this is now a different math. This is completely a different math. First of all, this is just the entries, and now we have a different book for asset register. So even for all the companies, because when you guys are going to work in companies, from my personal experience also, I always need to maintain a logbook for all the assets. We should always write the depreciations there, what was the cost price. We need to know about this stuff because accounting or bookkeeping is basically keeping records. So we need to also keep records of assets. So these are the model. You need to have the cost price, and again the debit and credit, it's directly coming from the depreciation. So plant and equipment, if it's debit here, it should be in the cost price, it should be debit. And depreciation, again, you need to adjust like this. So you need to figure out the whole process, but I'm just giving you the model, so it will be really helpful. All the important information I'm also giving, the dates, the units, how for depreciation, how to calculate, for estimated residual value. These are very important. So you need to find out from by yourself. But just remember, this asset model, the journal will help you to do this asset model, because everything is there. You just need to bring the amounts from here to here. That's it. And then you need to uh, figure out the balance. Very easy. Some assessment 2 and assessment this math, this register of machinery for asset number 346 and asset number 348 is exactly same method. It's nothing, different. It's very easy. Okay, so after that we have number 3. I'm just going to, maybe this is going to be my last lecture on this topic. So we have some correcting journal entries for the following. So we need to do correcting journal entries. So what is correcting journal entries again? Suppose we did the journal entry here, and let's say we maybe made some mistakes, right? We made some mistake here. Since we all are new, maybe we don't know how to do the bookkeeping. So we made some mistakes. Well, now you say, if you do a mistake here, how can we fix this? Because this is not just we are going to remove the page and it will be fine. No, because actually it's related to a lot of things. If you enter here, this is going to asset register like this math. Okay, so if you just remove the page, it's still not going to help, because it affects a lot of accounts, not just asset register, it also affects a lot of accounts. So we need to fix this. So they're saying in question, and this number 3, that sold goods on credit to Lennox Furniture for 3300, including GST of 300, and incorrectly posted the item from credit sales journal by debiting Kingscliff Kitchens. So they actually made a mistake. It should be the Linux Furniture, but they mistakenly, credit sales to Kingscliff Kitchens. So see, why it's account receivable. So they was expecting before that Kingscliff Kitchen will go to pay their money, but now they just figure out that no, Kingscliff Kitchens are not going to pay their money. They did it wrong. They did it error. So they previously, when they thought that Kingscliff Kitchen will give them money, they did account receivable control debit. But now they figure out that no, they're not giving money, so they are not doing the same thing, but if it's debit before, now you have to correct this, you need to do this credit. That's it. Very simple method. You don't have to delete the cell from here. If you mistakenly do done debit, you again need to do the same method, but this time it needs to be credit. And for actual one, for account receivable control, we actually owe money to Lennox Furniture. So now we need to give the actual transaction that Lennox Furniture is debit, account receivable debit. See? So the correcting journal entry is actually very simple. Suppose if you made a mistake, something debit or something credit, you need to do just the contra. You need to do the opposite. Again, they are saying timber worth 880 purchase on credit from Shady Timber Mill was incorrectly debited to purchases. So they incorrectly did that purchase debit. But now it's going to be credit, and this is an expense, timber expense, so it's going to be debit. Again, a check for 1210 received from a kitchen bench slab was incorrectly posted from the cash received from journal as a credit to the sales account. So what they did that they mistakenly they thought this is a sales, so they did. If if remember, I say in the accounting three golden rule that if it's income, it's credit. So they thought that it's income before, so they uh, credited sales, but now they figure out that no, that was not correct. So now again, sales should be debit, and the new, you know, kitchen vent slab, it should be credit. So yes, this is it. This is still number three. We have still number four to do. I'm expecting that you guys will try and you'll send me for review. I'm going to give you feedback as soon as possible. So thank you for today. Thank you for staying with me. Guys, if you have any question, please send me the mail, or you can even, post on the our website, our student portal. Just post on discussion. We can if you want to discuss there, it will be even better because everyone can see this. So thanks for today. Hopefully see you next time.